Welcome to Real Money Talks. Real strategies from the moneymakers and the world changers that you can use to make millions, keep those millions, multiply your wealth, and build your team. Here's your host, author of 5 New York Times bestsellers, money expert on Dr. Phil, CNN, CNBC, The Street TV, Fox News, and The View, Loral Langemeier.
Hi, this is Loral, and welcome to Loral's Real Money Talks, a podcast about how to make some money, how to keep it, and most importantly, how to get it invested for great returns. So I bring extraordinary folks to you every week, and we just continue this conversation about money, because until you're really in the deep conversation about money, most people have never been taught and don't understand it. So I have Scott Carter with me today. He is got an extraordinary background in finance, the financial markets, and specifically today we're going to talk about gold. And I'm going to have him back to talk about crypto. We might touch on it a little today. So, Scott, welcome to Loral's Real Money Talk.
Thanks for having me, Laura. I'm looking forward to it.
So, Scott, talk a little bit about how you arrived here. Right? I know you've done a lot of financial work. So, kind of share with our listeners, your background.
Sure. I actually started out in the financial services industry and cut my teeth at large insurance companies like Allstate Insurance Company and Kemper, and really learned how to do marketing, direct-to-consumer marketing, and how to make money in insurance, which can be tough to do as a balance sheet business, but it's a great training ground for understanding as a business owner how you really make money and how you manage a balance sheet and an income statement combined. But through the years, and after 20 some years, I was approached by a private equity firm to help them evaluate businesses and determine whether they had negotiated good prices to purchase a business. And that actually brought me into the current industry I'm in. We were conducting due diligence on a precious metals company in California. And we purchased that company, and I went on the board, and then I slid into the CEO role as an owner. And that started my career in this industry. And it's been spectacular, Laurel, because when you say talk about money, with the exception of the last 45 years, gold has been our money, and not many people know that. And the role it's played in our history, the value that it's created for all other assets is fascinating. And so I've been in this business to speak and educate investors on what role precious metals, gold and silver, as well as others, can play in helping them diversify their portfolio.
So I think it's fascinating. So talk a little bit about just gold as the standard, because I do agree. I don't think most people know. And I'm sure you can speak a little bit to even, our current Federal Reserve. Most people don't know it's a private company. It's not even the government.
Well, if I just go back to 1933, okay, and for most of your listeners are going to say, oh my gosh, that's a long time ago. It is. But up until 1933, Laurel, we actually carried gold coins in our pocket as our money. If you had a 1-ounce gold coin in your pocket, it was worth $20. And it would buy you, 2 suits of a shirt. And then Franklin Roosevelt took us off the gold standard, and all the U.S. citizens turned their gold under penalty of law into their local bank, and we received a paper $20 bill for every 1-ounce coin, or a $10 bill for every half-ounce coin. And the gold was taken in by the government, and we were given paper currency. And the paper currency was a substitute for the real thing, which was gold, which was actually our money. And we conducted commerce that way until 1971. And in 1971, because international treaties allowed other nations to still accept gold instead of paper, the international community, France, Italy, what have you, they were taking our gold from us because they thought the gold was worth more money than our paper dollars. And Richard Nixon, known as the Nixon shock in August of 1971, closed the gold window. He went on the national airways on a Sunday night and said the U.S. dollar will no longer be backed by gold, and it will be backed by the good faith and credit of the United States of America. And he closed the gold window. And from that point forward, there was nothing anchoring our dollar, meaning the only way we could print more dollars prior to that was the economy had to grow organically. We had to create real wealth to increase money supply. Well, we all know what's happened since then. Since 1971, we went from virtually no debt to $21 trillion in debt in the U.S., and the same thing all over the world. And it's created a huge problem, and we've devalued our money.
Yeah, it's amazing. I'm curious. I don't actually know the number. I'm curious. Do you know the current debt of the United States at this moment? What number?
21 trillion.
How much?
21 trillion. And the world debt is approaching 300 trillion. Every central bank in the world is doing the same thing. And these debts are not going to be paid. It's a huge problem, and it's a huge drag on economic growth. But for investors and your listeners, it's a huge drag on our ability to make a return on our investments, because the central banks can't allow interest rates to go up too high, because just the interest payment on all of this debt would choke the government's budget. So if they are arbitrarily keeping interest rates low, which they are, in Japan it's negative, Europe it's negative, here it's only, the 10-year is 2.5%, barely covering inflation. Then as investors, how do we get a return on our investment portfolio without taking more and more and more risk? And so it's created a huge problem, in my view, for our ability to make a return. And that's why there's a drag on the economy, drag on our returns, and it's impacting our retirement.
Oh, it's enormous. So let's talk a little bit about, what you're currently doing, which is gold and silver. So why is that important to investors? I know when we met, I teach as off Wall Street assets, and this has not been a category that we've really delved into. So I'm looking forward to our relationship with our, client bases. But talk about why it is important as another asset class.
Sure, absolutely. Most investors have two buckets, maybe three if you count retirement. And we have a real estate bucket, we have a equity bucket, stocks, et cetera, and then we have a retirement bucket. And all of those are dollar-based assets, and they all tend to go hand in glove with the market. Well, smart investors, and when you look at the ownership of tangible assets like gold and silver, smart investors have a fourth bucket, and that tends to be gold and silver or tangible assets. And the reason why they have that is because it is not dollar-based. It's finite, and it's actually it's a ballast in the boat of our investing, whereas we get exposure on dollar-based assets like equities and what have you. This can help offset the risk factors that are in the market. And even though there are a lot, Loral, a lot of risk factors out there, I'm going to focus on two. And the two are loss of buying power, and the second is the very thing we just spoke about, debt. But loss of buying power is our ability to buy the same goods and services with our money tomorrow that we can do today. And what I mean by that is that we are eroding our ability to purchase goods and services through this insidious thing that humans have created called inflation, or the central bank has created. And it is robbing us of our wealth every day, day in and day out. And I use this example, and maybe your listeners will relate to it, that, again, if I go back 100 years, in 1925, a new car cost $525. And today, a new car costs $33,500. And so the inflation rate has driven up the price of car. And some might say, oh, but our incomes have gone up as well. They have, but not nearly as much as the expenses. But if I go back to that new car in 1925, it took 26 ounces of gold to buy that new car. Gold was $20 an ounce in 1925. It took 26 ounces of gold to buy that new $525 car. And today, with the car at $33,500, it takes 26 ounces of gold to buy the new car today. So it's not what you have, it's what you keep. And gold has been the perfect hedge. When you look at the devaluation of money, gold holds that value and enables you to purchase the same goods and services that you could even 100 years ago or 200 years ago. And that's the power and the role it plays in a portfolio.
And Scott, talk about the recommendations. I mean, a lot of people are new to this, or actually, I'm sure some of our listeners, because they're all over the world, could already be in gold. But if you look at a whole portfolio, what would be some recommended percent of the portfolio that should be in gold? or silver.
Sure. Precious metals is a complement to your investment strategy. It is never the lead investment. It has volatility and has a long life cycle. So the recommendation is no more than 10 to 15% maximum of your net worth, because your main income generators or investment generators are still going to be the big ticket items. Most people are still going to have money in real estate, and you're going to have a portion of your portfolio in equities to get a return. So therefore, gold and silver is a complement. If we were a choir, we would be the alto, we'd be the baritone. We are never going to be the melody line. And the reason why that is because it's an offset. When the market does poorly, gold and silver might go up 200, 300%, not 10 or 12. And when the market is doing well, gold will hold its own, but it could just stay flat for 4 or 5 years. As a matter of fact, the market we're in right now, because equities have performed so well over the last 4 or 5 years, gold and silver hasn't done much at all over the last 3 or 4 years. But prior to that, it was up 300% over the previous 10 years. So it is it's a complement in a portfolio, 10 to 15%, and that will give you a well-balanced portfolio in this particular asset.
So, Scott, let's talk just about the market. Just recently I had some experts on just around real estate and, the speculation or the truth that it's time for a correction. So talk a little bit about just the overall market risks and specifically, again, just reaffirming that how gold and silver will be just a strong basis for a portfolio.
Yeah, well, I believe that we're so far along in the maturity of this bull market that, frankly, I'm surprised that we haven't had a correction. The only reason why we have not seen a correction, in my view, is because the central bank and the Federal Reserve has put a put out there to hedge or protect the bottom, because the measuring stick right now is how high the stock market can go. And every indication historically, I've been in this business like you, I've been in this business a long time. Every historical indication that would say we are at a top and overvalued is triggered. The Buffett indicator from Warren Buffett, highest it's ever been. The Shiller Index, the PhD economist on the Shiller Index, equity markets, real estate markets, highest they've ever been. If you look at the valuations of the S&P, meaning the price earnings ratio on equities, it's the highest it's ever been. There is no reason why companies are more valuable today than they were 10 years ago. All we're doing is we're expanding the multiples and we're paying more money for the same earnings. And that's a dangerous time. And so the last point I'll make is that when you're getting to the end of the market, fewer and fewer companies make up the increase in the market. And right now we have 5 companies, if you can believe this, 5 companies. It's known as the FANGs: Facebook, Amazon, Apple, Netflix, and Google. Those 5 companies represent 50% of the value of the S&P 500. So 5 companies out of 500 represent 50% of the market. And when you see that, you know that you're getting to the top.
Interesting time. So what are you telling investors to do? Obviously, get some gold, get some silver. And by the way, what's your website, Scott? So if our listeners can go visit you over there.
Absolutely, yeah. pmcapital.com is the website. That's a great place to go to get information, to download current literature, marketing materials, a blog that I have to give you information, become informed. So you can go there. But what I would ask investors to do is take a fresh look at your portfolio. We tend to just ignore rebalancing. We let them run and we don't spend enough time making sure that we're not overexposed and overvalued in particular areas of the market. So you should take a look as an investor at your portfolio. Make sure that you don't have too much concentration in any one asset class or any one equity or any one industry. And also take a fresh look at how precious metals, gold and silver in particular, can help offset some of that risk factors you have. If you believe in what I'm saying, meaning that the market is at the top, we're overvalued, that there's going to be a correction, that it's just a matter of time, then you should probably take a fresh look and offset some of that money. There's no glory in having paper gains that turn into paper losses. Why not take some chips off, take some chips off the table. Even if you have to pay capital gains tax, you still have a gain. Take some chips off the table, evaluate other assets that you can invest in. If you don't see something of value, just keep it in cash. But if you see something of value, maybe it is precious metals, then diversify. When the market corrects, the losses will be shallower. Probably hold your gains, and you'll sleep better at night. That's what precious metals does. So take a fresh look, have a balanced portfolio, and become educated and informed of where we are in the market. And I think you're going to do well as an investor.
Absolutely. Another area I want to touch on before we end is Bitcoin. So Bitcoin digital is like digital gold, some people say. So give some comment on that. Also setting up another podcast we'll do just about cryptocurrency, because I know you're well into that as well.
Sure, absolutely. Well, there is a phrase out there that Bitcoin is the digital gold. And the reason why that's said, Loral, is because when you think about why gold has been our money over the years, it's because it's finite, meaning it can't be recreated. It can't be minted like dollars can't be. And it's transportable. It's worldwide. It's fungible. And it's easy to use, and it's durable. So when you think about the actual real McCoy, physical gold, and then compare that to Bitcoin, you say, well, I'm not sure I subscribe to, Bitcoin being digital gold. However, what Bitcoin has that gives it value is that it can't be recreated. It can't be manipulated by a central bank or a government, which is a value. It is finite in that it's defined in how many bits or Bitcoins there will be ultimately when it's done mining. And therefore, supply and demand and limited availability will subscribe value to it. And therefore, that's why the digital world is looking at Bitcoin as a replacement to what we used to have, which was a finite physical gold. And, I think there's some merit to that. I think that we are in the mess we're in because of centralized power, like a central bank, to try to stave off recessions and take care of the political class and what have you. We've abused that power and we've overprinted money. So the idea of being able to have something that's outside the control of a central organization and is really giving the power back to the people is pretty significant. And that's where digital currencies, Bitcoin, and other cryptocurrencies in general will be taking us. And I think that that's why they have staying power. And that's why my particular business is moving that way. I mean, when you think about if you could put cryptocurrencies combined with gold into the marketplace, I've said before, it's like when Mick Fleetwood met Stevie Nicks. Separately, they were terrible, but when they became Fleetwood Mac, they were incomparable. I think when you put gold with cryptocurrency, you could have a combination there that's going to be very powerful as we go forward, and that's really where my business is moving to.
Mm-hmm. Yeah, I think if some of the banks don't get more involved, the digital currency is going to leapfrog over top of them, right?
That's exactly right. Yeah.
Yeah. So let's just talk really quick about the tactics. So they get to your website. Let's talk about the transaction, how simple it is. And they could either store their gold themselves or you'll store it for them. So just talk a little more about the tactics before we wrap up.
Absolutely. Yeah, it's very simple to own gold and silver. It's making a purchase where you set up an account with the company and you decide on how much gold or silver you want to purchase. You wire money in, you fund the account. And after that, many people ask, well, what do I do with it? Where does it go? Frankly, most people, Loral, take physical possession and put it in their safe at home or in their safety deposit box at the bank. We ship it right to your door insured. And so you have it with you. And that's how most people take possession. However, if you want to not deal with the actual metal, then we arrange storage for you at Brinks or DBS. And we set up an account in your name, and your gold and silver is actually stored in that account. As far as turnaround, if you ever need to liquidate it, it's just the reverse. Call us. We make a market every day based on the price of gold, and you can sell a portion of your gold, and we sell it. We cut you a check, and we either wire or send you a check in the mail. So it's actually a very simple transaction to own gold and silver. But you actually own the physical gold. It's not a piece of paper. It's not a promise. It's not a certificate. There is no counterparty risk. This asset, your asset you purchased, is not another company's liability.
Awesome. So when they sell it, how are people taxed on it? So let's just say there's, some growth in the markets. Talk about that a little bit.
Gold and silver is defined as a collectible, believe it or not. So it sits right in between capital gain and ordinary income. And that it didn't change in the last tax revision. And gold is taxed at a 28% tax rate. Kind of like when you sell a car, a collectible car, a piece of artwork, a piano. That's a collectible tax rate that hasn't changed, stays consistent.
It's interesting. And the irony that it's a collectible, not the basis of our financial system. So one just kind of fun fact, which country actually owns the most gold? If you look across the world, who actually in a very smart way accumulated it, right?
If you look across the world, the country that owns the most gold is the United States of America at 8,300 tons. And when we in 1933 made it illegal to own gold and the American people had to turn in the gold, there was 20,000 tons turned in. So the reason why the United States of America has the most gold is we got it from our people. And that 20,000 tons whittled down to 8,300 tons before Nixon closed the gold window. But 8,300 tons is still the largest in the world, followed by the other major, allied nations from World War II. You got Germany, France, and Italy. And the IMF, believe it or not, have a significant amount of gold. But the country that is catching up with us rapidly and loves gold is China. And their long-term mission, in my opinion, is to accumulate enough gold to back the yuan, their currency, buy gold, and change the face, if you will, of what the reserve currency is on the planet, and really attack the hegemony of the U.S. dollar as the world's reserve currency.
Interesting. Well, Scott, this has been a fascinating podcast. I hope all of you that are listening out there got some great value from it. And again, stay tuned for more with Scott. We'll be talking more about cryptocurrency and how that also is a great play done right. I'll say that just to kind of tee that up. So again, go to pmcapital.com. Scott, thank you for all your brilliance today.
Thank you for having me, Loral. It's a pleasure to be here.
Absolutely. And those of you listening, again, if you have any questions or requests, go to Ask Loral. It's AskLoral. AskLoral.com. There's an input screen for your name, phone number, and email. And just ask a question, make a request. If you want a private conversation with Scott, we can facilitate that through there as well. So you all have a great day. We'll be back next week with more on Loral's Real Money Talk.
Thanks for listening to the Real Money Talks podcast. Your host has been Loral Langmeyer, author of 5 New York Times bestsellers, money expert on Dr. Phil, CNN, CNBC, The Street TV, Fox News, and The View. Want to learn more about off-Wall Street investing, tax strategies, and multi-million-dollar business strategies? Visit liveoutloud.com/podcast for past episodes, show notes, and resources. For some special wealth-building gifts only for Loral's podcast listeners, visit liveoutloud.com/podcast gifts. Do you have a burning question for Loral? Visit askloral.com to submit your question, and it may just be covered on a podcast episode. So stay tuned and be sure to subscribe to get new episodes every week.